Look, nobody talks about this part enough. Right now, debt is a straight-up cage choking companies before they can really take off. Everyone's piling on loans like it's the only way to grow. But what they don't tell you, that debt financing today is more like a ticking time bomb, slowly killing the very business you're trying to build. It's frustrating as hell to see founders, investors, leaders locked into crushing repayment schedules that end up eating every dime of margin, leaving no room to innovate or invest in what actually moves the needle. The market's changed. Interest rates aren't playing nice anymore. Banks want guarantees like you're handing over your firstborn, and debt instruments are no longer cheap fuel. They're anchors pulling you down. You might think, okay, I can handle this, but scratch underneath and it's stress, missed opportunities, and incremental suicide of growth strategies. You watch cash flow get sucked away instead of reinvested, and it feels like no matter how smart or hungry you are, the system's rigged against you scaling fast and free. Here's the brutal truth. Debt is no longer the ally. It's the enemy in disguise. And if you don't wake up now, you'll get swallowed by it. But it's not hopeless. You can fight back. You have to smash the blind faith in debt as the default option. Step 1. Stop chasing more capital through traditional loans just because it's there. Stop layering debt on debt like it's a winning game. Instead, rethink how you build capital structure from the ground up. Get vicious about questioning every line on your balance sheet. Can you get strategic partners who bring cash plus something far more valuable? Network, market access, operational help, rather than just lenders who want monthly checks. Spoiler, yes, they exist, but you gotta hunt, cold call, pitch. Like your survival depends on it, because it does. Step 2. Shift your mindset from finance as a transaction to finance as a lever for real growth. This means rip apart your growth plans and identify where traditional funding chokes you and where flexible equity-like financing or revenue-sharing models break the chains. Forget what you heard about dilution. If debt is bleeding you dry, swapping a piece of the pie for real runway to scale bigger and faster is a no-brainer. Find those investors who understand growth timing and back that rhythm, not the bank's interest calendar. You want capital that breathes with your business, not capital that suffocates it. Step 3. Get so ruthless about cash flow management it hurts. Track every dollar out and in like you're guarding a fortune. Debt payments have to be planned for months ahead, not just hoped for. Build multiple cash stress test scenarios. What if sales drop 20%? What if you lose a big client? Debt makes these moments lethal, so prepare like your business life depends on it, because it does. If numbers don't make sense in those tests, don't just bite the bullet, reshape your model before you get crushed. Step 4. Lean into private equity and alternative financing in ways most shy away from. These aren't just capital injections, they are opportunities to plug into a network of survivors and builders who get the pain debt causes. Equity partners bring muscle beyond money, real operational experience, strategic insight, and crisis-tested advice. If you're stuck, find these few players who do more than write checks. They carry weight and open doors, but beware. Not all equity is created equal. Go for the ones who want you to win in the long run, not just cut and run at first gain. At the end of the day, this is a call to take full control of your financial destiny. Debt financing crushing growth? It's a symptom of a deeper problem. Mindless borrowing and old-school finance that hasn't kept up with real-world challenges founders face today. Break that habit. Be brutal with your capital decisions. Own the finances like your company's future depends on it, because it does. Don't let the pressure of short-term repayment schedules dictate your long-term possibilities. Seek smarter money, better partners, and never be afraid to refuse easy debt that's actually a trap. You're building something that should be unstoppable. Don't let debt make it fragile. Make the system work for you, not the other way around. That's how growth stops being a dream and starts being your reality. Subscribe to our YouTube channel and visit the featured link to discover more.